Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to do an update to new home construction.
Yes.
Find out how this affects the housing market. And then we've got some cool charts because there's some data that we want to show you that will probably surprise you.
And the data is from Todd's BFF.
Who is?
Well, they're going to have to wait to find out.
They're going to have to wait.
Yes.
My BFF.
Yes.
Okay. All right. So what we're going to do is we're going to talk about new construction and where it's going, because unlike you may think, oh, this is more stuff that's going to just come in the housing market and be bought up, not necessarily the case.
Not so fast. That's right.
Okay, so here's the first piece of information we'll go with. Okay, builders increased activities in September, sending housing starts back up. That's good, right? By 7% over August. Starts for single families are now 8.6% the past year, as tight existing home inventories are driving buyers to new builds. Talk about this really quick. Nowhere in here do they mention high interest rates.
Right. So builders kind of pulled back a little bit in August, but then in September they decided, you know what, this is a good time to build because there's very little inventory, even less on the horizon, and it's a good time to do some profit taking. So to your point, nowhere in there they mention interest rates. And why would they do that? Well, maybe because there is more than one buyer per house out there.
Yeah.
So buyer demand is still strong, and they're looking to cash in on some of that buyer demand.
Yeah, there is no, people can refi. Interest rates are not always going to be what they are now.
Interest rates might be higher, might be lower, but the one thing we can all count on is they will change.
Right. Okay. Now here was the next quote. Tight inventories sent monthly existing home sales down in September. Now, first of all, they always drop in September. So this is, yes, inventories are tight, but how numbers of sales drop in September.
Okay, but
and then they drop again in October.
Right. But the number of transactions has dropped. A lot of that reason is because there are simply fewer homes to buy. So if you only have 2,000 homes versus 3,000 homes a few months ago, obviously you're going to have less transactions when there are 2,000 homes on the market than when there are 3,000 homes on the market. There's just less inventory. So that's the reason for the diminished number of transactions. It has very little to do with interest rates.
Okay. The supply of homes for sale is at 3.4 months. That means if no new homes came on the market, at the current rate of purchasing, which is for this time of year, it should be much greater. Mm-hmm. We should have probably 6, 7, 8 months of supply this time of year. We have less months of supply in the spring. That's well below the 5 months of a normal market, while the median price is up 2.8% from a year ago. So we have highest interest rates we've had in 20 plus years. Prices are up and inventory is down.
Well, to me, the most interesting part of that passage is that they said that normal supply is 5 months. Now, we know that if you exclude the last 3 years, normal supply is 6 to 7 months. But because normal supply, or the supply has been so diminished in the last 3 years, that's actually been factored in here. So now the normal supply has gone from 6 to 7 months to 5 months. That's how much of an impact the diminished supply has had to the overall perception of what normal supply is.
Here's the next one. Building permits slipped in September, all due to multifamilies. This is total building permits, mm-hmm. Okay? Single family permits rose as they've done every month since February. And the number of homes under construction is near the highest level on record. Juana, could the massive tons of overbuilding that the new home builders are building crash the housing market because of the highest level on record?
Okay, so very little of that was actually factual.
Okay, why is that?
Okay, so first
of all, do you have
any
data or facts to support that?
Yeah, so first of all, the numbers were wrong. So we'll start there because builders actually pulled back in August for single-family homes, and they ramped up in September. So that's the first part. So that part was wrong. As far as apartments, fine, I'll give them a push on that. But then as far as record numbers of new homes being built, that's like That's a whopper, okay? That's beyond a little off. That's just a whopper. And this is where we get to Todd's BFF.
Okay, so somebody is going to see that. Someone's going to read that, and then they're going to post in the comments, but Todd, the new home builders, they're building a record number of homes. Like, the homes are going to flood the market. Here we go. This is the Fred chart. This is privately owned housing units, single family. Privately owned just means home builders building homes that people can buy. All this excludes is government housing, okay, which is called public housing, okay? Now, if you look at this chart, it goes all the way back to before 1960. Now, if you go look all the way to the right there, the level of homes being built today is less than just a couple years ago, but it's like almost half of what it was in 2005. As a matter of fact, it's less than all of the 2000s, almost all of the 90s, all of the 80s, all of the 70s, and all of the 60s. Like, literally, it's the one of the lowest. The only time we had less homes built really was 2009 until like 2019. The chart speaks for itself. As a matter of fact, the amazing thing about this chart is you can see what caused one of the factors of the housing crash was the massive amount of overbuilding that took place in 2005, and then none of the builders built. And you can see how we've gotten behind with new home builds. Remember, the country's much bigger. We have more people coming here. We should be building probably on this chart 1,600, which is 1.6 million homes a year. We're not even building 1 million homes a year. We are way behind in new home building. And this causes a future problem, Juana. Why does this cause a future problem?
So this is actually causing the present problem, which is not enough inventory in the resale market, and it's not being augmented by sufficient inventory in the new home market. But the future problem that you're talking about is not only not enough inventory going forward in the future as far as for new household formations, but also not enough inventory for the replacement of homes that are obsolete, destroyed, or otherwise not habitable.
Okay, so we've had people come on the channel and go, Todd, this is the worst time to buy a house. Like, this is literally, you should not buy a house right now. Well, using that logic, rents have never been as high as they are. So this is the worst time ever to rent.
Well, using that logic, I've never been as old as I am today, so clearly I'm about to die.
And so if you're thinking of renting, you should wait till the rents crash and then go rent, because it'd be dumb to rent right now, right? Okay. If it's so bad to buy houses right now that Pretium Partners is acquiring 4,000 houses from D.R. Horton as rental homes in a $1.5 billion deal. It's such a terrible time to buy that a bunch of money managers for some, I've never even heard of this company. They're probably not even one of the big ones. If this smaller company is buying a bunch of houses, then you got to assume BlackRock and all these other ones are also going to the new home builders going, hey, we need more homes. There's not enough in the resale market, so we're going to buy yours. Right?
Right. So what does that mean to a home buyer who wants that new house smell? Now you're competing with the big boys. So not only are you competing with the big boys on the resale market and competing with cash buyers on the resale market, but now you're competing with the big boys who are buying entire subdivisions as far as new home construction. So again, this just makes it more difficult to buy a home. And unless you think that the future holds something different, I think this is telling of what's going to happen going forward, is it's going to get even harder to buy new homes going forward, because you're going to have more institutional buyers saying, hey, you know what, forget resale, there's just not enough, it's too much trouble, it's actually too expensive to buy resale. Let me explain real quick why. Because resale, you're buying in onesies, right? And that's very expensive because you're having to pay a lot of money as far as administrative costs to secure the homes, to then purchase them, to renovate them, rent them out, do all this good stuff. That's very expensive when you're doing it in onesies. But when you're buying a whole subdivision, you've got economies of scale. And so now all of a sudden becomes much more financially advantageous. Now you're controlling the neighborhood. And so that makes a lot more sense. If I'm an investor and I have sufficient funds to buy a subdivision, I would much rather buy a subdivision than try to buy onesies all over a market area. That's really expensive. Plus, I have to renovate all those things. These are brand new homes. I don't have to renovate them. And even when I do, now they're all in one location. Again, I've got economies of scale because now I can have a small staff that is just going through them and renovating them as they come up, much like apartment buildings work. So apartment buildings are very efficient that way. As far as how they do that sort of work. Now you're applying that same concept to single family homes. It's absolutely brilliant.
Yeah. Okay, here's a couple more quotes. Real estate investment management firm Pretium Partners is acquiring thousands of homes from home construction company D.R. Horton in a $1.5 billion deal, as Bloomberg first reported. They're probably not the only one.
No, they're not.
Okay. More than 4,000 homes are involved in this transaction, which are primarily located in high-demand markets in the Southeast and the Southwest, the Wall Street Journal reported. The homes, planned as rentals, have already been leased.
Right.
Okay, now, here's another thing. I believe these homes in the future are very unlikely to end up in the resale market.
No, they won't. Why.
So imagine this. You own 150,000 homes in the U.S., all over the country. And you wanted to cash some of them in. So what are you going to do? Go hire 150,000 real estate agents? They sell the house for me? No, you're not going to do that. What you're going to do is you're going to go, hey, I have a bunch of homes. Who wants a home? And the Alabama Teachers Association is going to go, hey, what kind of return do those homes get? And they go, well, right now they're getting 7%. And they go, you know what? It's pretty risk-free. They're real estate. They're owned free and clear, right? We'll buy them. We want to buy 3,000 homes. And then what we'll do with the 3,000 homes is we'll just give you the cash. And then you can keep managing them, but all the rents that come in, just you send them to us, and then we'll distribute that as a return to our investment, our retirees who are, retired school teachers from Alabama. So these things are never going to end up almost never. There's not going to. So what this is looking like is going forward, we're not building up enough new homes to replace the ones that are being destroyed every year, which is anywhere from 100 to 250,000 homes that are literally gone, right? And then household formations. So we are looking like we're going to have this long-term shortage. So it's possible, like certainly if interest rates drop at all, even more people are going to try to come in the housing market. Prices are going to go up. So when I hear someone say, Todd, this is the worst time ever. You never buy at the peak. Okay, if I gave you a time machine and could send you back to 2019, knowing what you know, would you buy a house? And you'd be like, yeah, they were 40% cheaper in 2019. I'd be, but wait, if you were in 2019, homes had never been that expensive. They were the most expensive. And I would say, why would you buy right now? I'm going to wait for the crash. But they're not going to crash. Why? Because they're going to go up 40%. I would say you're stupid, right? That's the whole thing is, it's kind of obvious. We're not building enough homes. There's all these people trying to buy homes. If you don't believe me, just look around. What do you see happening? Home prices are going up. Why are home prices going up with 7.5%, almost 8% interest rates? Because we have a shortage of houses.
Right. So the other thing to keep in mind that when they're buying these subdivisions and then eventually when they sell them as a block to Todd's example, to the teachers union or whomever, they are maintaining the management of these properties, which means that they are continuing to generate revenue from properties they no longer own. So this is absolutely brilliant. So in the short term, they're collecting rents. In the long term, they're going to be collecting property management fees. So this is yet another stream of income for these builders. Builders have gotten very smart, and they have figured out how to work the system to their advantage. And in this case, you've got this hedge fund that's buying these homes. So we'll see if they're the ones who decide to manage this for themselves, or if they have D.R. Horton manage it for them. It'll be interesting to see how that pans out. In the long run, they will probably have their own management team because that's, again, more cost effective for them. But in the short run, they may have somebody like the builder manage them, particularly in the short run where all these homes are still under builder warranty, and maybe the builder has given them an extended builder warranty because it makes sense for them. It's financially advantageous. So it'll be interesting to see how all of these play out. But to Todd's point, the number of homes that individuals will be able to purchase going forward will continue to diminish as there's more institutional money chasing residential real estate.
Here's the thing. Take two people. This will be my last thing. Take two people. Someone buys today and has an 8% interest rate, which historically is not that bad. They buy a house for $400,000, okay? And you're like, you're dumb. I can't believe you could have rented that same house for $800 a month less. And you're like, whatever. You say, I'm going to wait till either prices drop or interest rates drop, okay? 5 years later, interest rates go down to 5%. And you say, I'm going to go buy a house. I'm going to show that guy. And you go out and you go look for houses. Homes are $500,000 for the exact same house. You're like, oh, darn it. But, interest rates are 5%. So I'm going to buy the house. So you go buy the house and you go, hey, I just bought a house. Look at my payments, less than yours because I got a 5% loan. He's like, oh, I refied at 5%. So first of all, I've been in the house for 5 years. I paid a bunch of it off. I owe a lot less than you. Matter of fact, we have identical homes, but I have $160,000 equity and you have zero equity because you just bought it. And we have the same payments. And yes, I had a higher payment for a few years, but you were paying rent and I was paying down my mortgage and getting a tax break. So the question for why anyone would buy a house now is exactly that. Because you're rolling the dice. You're betting home prices tank substantially. And with all these hedge fund and Wall Street companies, it doesn't look like if there's any softness in a market where home prices tank substantially, they're going to come in.
Right. So there's big money looking at residential real estate, and that's something we've talked about a lot. There's a lot of support for residential real estate values. 42% of homes are free and clear, and the more these institutional investors purchase homes, the more homes are going to be free and clear. Remember, a lot of these institutional investors are purchasing these homes cash. Some are financing them, and that's very true. But a lot of them are purchasing them cash because they have funds that they have to invest because it's the way their business model works. They can't sit on money. They have to invest it. So have you figured out who Todd's BFF is? Yes, it's Fred. Okay.
Fred.
Fred is Todd's BFF. So
Fred's Federal Reserve.
Yes. Todd loves the Fred charts, and we love sharing them with you. So if you giggled, if you learned something, if you found this entertaining, interesting, or in any way useful and a good use of your time, please remember to like the video, subscribe, hit the notification bell, leave us your real estate related comments. If you're interested in buying, selling anywhere in the country, please get in touch with us. We would love to connect you with a great agent. If your market is Las Vegas, we would love to help you personally. So please give us the opportunity, and we will see you on the next video. Bye.
Bye.